Welcome back to Drowsy Tales Daily. Tonight, I have 35 incredible stories from Reddit about automotive industry frauds and dealership deceptions where dishonest car dealers, mechanics, and auto service providers deliberately betrayed customer trust through odometer tampering. Hidden fees, predatory financing, and repair scams that turned essential vehicle purchases and maintenance into costly nightmares and violated consumer protection standards. Our first story comes from car buyers who discovered their trusted dealership was deliberately rolling back odometers on used vehicles while falsifying maintenance records to make high-mileage cars appear barely driven, deceiving dozens of customers who paid premium prices for what they believed were low-mileage vehicles despite odometer manipulation and documentation fraud that concealed actual vehicle usage and wear patterns according to automotive industry standards and consumer protection expectations. The odometer rollback operation involved comprehensive vehicle history fraud and mileage misrepresentation while maintaining enough legitimate sales activity to avoid immediate detection by automotive oversight and dealer monitoring that relied on honest vehicle representation and accurate mileage disclosure for customer protection and automotive industry integrity. The dealership had been particularly focused on targeting luxury vehicles and popular models while ensuring that odometer fraud would be concealed through false maintenance documentation and manipulated service records that would justify premium pricing despite excessive mileage and vehicle wear that customers would discover only after purchase completion and ownership transfer according to vehicle sales standards and automotive consumer protection requirements. The scheme extended to creating false vehicle history reports and maintenance documentation while coordinating odometer fraud with vehicle preparation systems to maximize sale prices while concealing actual vehicle condition and usage history that would affect resale value and customer purchase decisions based on accurate mileage disclosure and vehicle condition representation. The dealership had also been manipulating vehicle inspection processes and certification procedures to maintain odometer fraud while avoiding automotive oversight and dealer monitoring that would reveal deliberate mileage manipulation and documentation fraud that violated consumer protection and automotive sales integrity standards. The odometer rollback fraud was discovered when customers investigated vehicle history and discovered inconsistent mileage records, leading to evidence that revealed deliberate automotive fraud and mileage manipulation that violated automotive sales regulations and consumer protection standards. Our second story comes from vehicle owners who discovered their trusted mechanic was deliberately damaging perfectly good parts during routine maintenance visits while creating unnecessary repair bills totaling thousands of dollars over several years until hidden cameras revealed the fraudulent practice and parts manipulation that violated automotive service standards and customer trust expectations. The mechanic had been operating comprehensive parts damage schemes where customers would bring vehicles for routine maintenance while the mechanic would deliberately damage functional components to create repair opportunities and additional billing revenue. Despite service agreements and maintenance contracts that specified honest diagnostic procedures and necessary repair identification according to automotive service standards and customer protection requirements. The deliberate parts damage operation involved targeted component sabotage and maintenance fraud while maintaining enough legitimate repair work to avoid immediate detection by automotive oversight and service monitoring that relied on honest diagnostic procedures and necessary repair identification for customer protection and automotive service integrity. The mechanic had been particularly focused on damaging expensive components like brake systems and transmission parts while ensuring that parts damage would appear as normal wear and mechanical failure rather than deliberate sabotage that would raise customer suspicion and automotive oversight attention according to service fraud concealment and customer deception techniques. The scheme extended to creating false diagnostic reports and maintenance documentation while coordinating parts damage with repair billing systems to maximize revenue collection while concealing deliberate component sabotage and maintenance fraud that would affect vehicle safety and customer financial security based on honest service provision and accurate diagnostic procedures. The mechanic had also been manipulating service scheduling and maintenance recommendations to maintain parts damage fraud while avoiding automotive oversight and service monitoring that would reveal deliberate component sabotage and billing manipulation that violated customer protection and automotive service integrity standards. The deliberate parts damage fraud was discovered when customers installed surveillance equipment and recorded the mechanic damaging good components. leading to evidence that revealed comprehensive automotive service fraud and parts manipulation that violated automotive service regulations and customer protection standards. Our third story comes from insurance customers who discovered their auto insurance adjuster was conspiring with a preferred repair shop to inflate damage estimates while using inferior aftermarket parts, pocketing the difference and leaving customers with substandard repairs that failed within months of completion according to insurance fraud investigation and automotive repair standards. The insurance adjuster had been operating collaborative fraud schemes where accident damage would be assessed at artificially high estimates while repair shops would use cheap aftermarket components and pocket the difference between insurance payments and actual repair costs despite insurance contracts and repair agreements that specified quality parts usage and honest damage assessment according to insurance industry standards and customer protection requirements. The damage estimate inflation operation involved comprehensive insurance fraud and repair cost manipulation while maintaining enough legitimate claim processing to avoid immediate detection by insurance oversight and claims monitoring that relied on honest damage assessment and quality repair standards for customer protection and insurance industry integrity. The adjuster had been particularly focused on targeting expensive vehicle repairs and comprehensive damage claims while ensuring that estimate inflation would be concealed through false damage documentation and manipulated repair specifications that would justify excessive insurance payouts despite actual repair costs and parts quality that customers would discover only after repair failure and component malfunction according to insurance claim standards and automotive repair protection requirements. The scheme extended to creating false damage reports and repair documentation while coordinating estimate inflation with repair shop billing systems to maximize profit margins while concealing actual repair costs and parts quality that would affect vehicle safety and customer financial security based on honest insurance claim processing and quality repair provision. The adjuster had also been manipulating claim investigation procedures and damage assessment protocols to maintain estimate inflation fraud while avoiding insurance oversight and claims monitoring that would reveal collaborative fraud and repair cost manipulation that violated customer protection and insurance industry integrity standards. The insurance estimate inflation fraud was discovered when customers investigated repair quality and discovered substandard parts installation, leading to evidence that revealed comprehensive insurance fraud and repair cost manipulation that violated insurance regulations and customer protection standards. Our fourth story comes from car buyers who discovered their salesman was adding hidden fees and unnecessary extended warranties to financing agreements without customer knowledge, manipulating paperwork during the signing process to pad commissions through deceptive practices that violated automotive sales regulations and consumer protection standards. The car salesman had been operating comprehensive financing fraud schemes where customers would agree to specific vehicle prices and financing terms while hidden fees and unnecessary products would be added to final agreements without customer awareness or consent despite sales contracts and financing documentation that should have disclosed all charges and additional products according to automotive sales standards and consumer protection requirements. The hidden fee operation involved targeted contract manipulation and financing fraud while maintaining enough legitimate sales activity to avoid immediate detection by dealership oversight and sales monitoring that relied on honest contract disclosure and transparent pricing for customer protection and automotive sales integrity. The salesman had been particularly focused on adding expensive extended warranties and service contracts while ensuring that hidden charges would be concealed through complex financing documentation and rapid contract processing that would prevent customer review and fee identification according to sales fraud concealment and customer deception techniques. The scheme extended to creating false financing calculations and contract documentation while coordinating hidden fees with dealership billing systems to maximize commission earnings while concealing actual vehicle costs and financing terms that would affect customer purchase decisions and financial obligations based on honest sales practices and transparent contract disclosure. The salesman had also been manipulating contract signing procedures and financing explanations to maintain hidden fee fraud while avoiding dealership oversight and sales monitoring that would reveal contract manipulation and fee concealment that violated customer protection and automotive sales integrity standards. The hidden fee fraud was discovered when customers reviewed financing documents and discovered unauthorized charges, leading to evidence that revealed comprehensive automotive sales fraud and contract manipulation that violated automotive sales regulations and consumer protection standards. Our fifth story comes from customers who discovered their mechanic shop was ordering expensive parts but installing cheap alternatives while charging full price for premium components, keeping the authentic parts for resale, while customers received inferior replacements that failed prematurely according to automotive service fraud investigation and parts quality standards. The mechanic shop had been operating comprehensive parts substitution schemes where customers would pay for premium OEM components while receiving inferior aftermarket alternatives that would fail quickly and require additional repairs despite service agreements and parts warranties that specified genuine component installation and quality assurance according to automotive service standards and customer protection requirements. The parts substitution operation involved targeted component fraud and service billing manipulation while maintaining enough legitimate repair work to avoid immediate detection by automotive oversight and service monitoring that relied on honest parts installation and quality component usage for customer protection and automotive service integrity. The shop had been particularly focused on substituting expensive engine and transmission components while ensuring that parts fraud would be concealed through false installation documentation and manipulated service records that would justify premium pricing despite inferior component quality that customers would discover only after premature failure and repeat repairs according to service fraud concealment and customer deception techniques. The scheme extended to creating false parts ordering records and installation documentation while coordinating component substitution with service billing systems to maximize profit margins while concealing actual parts quality and installation practices that would affect vehicle reliability and customer financial security based on honest service provision and quality parts installation. The shop had also been manipulating service procedures and parts verification processes to maintain substitution fraud while avoiding automotive oversight and service monitoring that would reveal component fraud and billing manipulation that violated customer protection and automotive service integrity standards. The parts substitution fraud was discovered when customers investigated component failures and discovered inferior parts installation, leading to evidence that revealed comprehensive automotive service fraud and parts manipulation that violated automotive service regulations and customer protection standards. Our sixth story comes from rental customers who discovered their car rental company was charging customers for pre-existing damage while using photo manipulation software to make minor scratches appear severe, generating fraudulent repair bills that were automatically charged to credit cards according to rental fraud investigation and consumer protection standards. The rental company had been operating comprehensive damage fraud schemes where customers would return vehicles in good condition while being charged for pre-existing damage that had been documented before rental periods began despite rental agreements, and damage inspection procedures that should have identified existing vehicle condition and protected customers from false damage claims according to rental industry standards and consumer protection requirements. The pre-existing damage operation involved targeted billing fraud and photo manipulation while maintaining enough legitimate rental operations to avoid immediate detection by rental industry oversight and customer service monitoring that relied on honest damage assessment and accurate billing practices for customer protection and rental industry integrity. The company had been particularly focused on targeting expensive luxury rentals and premium vehicles while ensuring that damage fraud would be concealed through manipulated photo documentation and false damage reports that would justify excessive repair charges despite actual vehicle condition that customers would discover only after credit card charges and billing disputes according to rental fraud concealment and customer deception techniques. The scheme extended to creating false damage assessment reports and repair documentation while coordinating billing fraud with payment processing systems to maximize revenue collection while concealing actual vehicle condition and damage assessment practices that would affect customer rental experience and financial security based on honest rental practices and accurate damage disclosure. The company had also been manipulating vehicle inspection procedures and damage documentation processes to maintain billing fraud while avoiding rental industry oversight and customer service monitoring that would reveal damage fraud and billing manipulation that violated customer protection and rental industry integrity standards. The pre-existing damage fraud was discovered when customers investigated rental charges and discovered photo manipulation evidence, leading to evidence that revealed comprehensive rental fraud and damage billing manipulation that violated rental industry regulations and consumer protection standards. Our seventh story comes from loan applicants who discovered their auto loan officer was manipulating credit scores and income verification documents to qualify unworthy buyers for subprime loans, earning higher commissions while setting customers up for inevitable default and repossession, according to Automotive Financing Fraud Investigation and Lending Standards. The loan officer had been operating comprehensive financing fraud schemes where customers with poor credit would be approved for vehicle loans through falsified documentation and credit manipulation while being charged excessive interest rates and fees despite lending regulations and qualification standards that should have prevented predatory lending and protected consumers from unaffordable financing, according to automotive lending standards and consumer protection requirements. The credit manipulation operation involved targeted document fraud and qualification falsification while maintaining enough legitimate loan processing to avoid immediate detection by lending oversight and compliance monitoring that relied on honest credit assessment and income verification for customer protection and lending industry integrity. The officer had been particularly focused on targeting desperate buyers and first-time purchasers while ensuring that qualification fraud would be concealed through false credit reports and manipulated income documentation that would justify loan approval despite actual financial circumstances that would make repayment impossible, according to lending fraud concealment and customer exploitation techniques. The scheme extended to creating false employment verification and income documentation while coordinating qualification fraud with lending approval systems to maximize commission earnings, while concealing actual customer qualifications and repayment ability that would affect loan performance and customer financial stability based on honest lending practices and accurate qualification assessment. The officer had also been manipulating loan application procedures and credit verification processes to maintain qualification fraud, while avoiding lending oversight and compliance monitoring that would reveal document falsification and credit manipulation that violated customer protection and lending industry integrity standards. The credit manipulation fraud was discovered when customers investigated loan terms and discovered falsified qualification documents, leading to evidence that revealed comprehensive automotive lending fraud and qualification manipulation that violated lending regulations and consumer protection standards. Our eighth story comes from car buyers who discovered their used car lot was flooding damaged vehicles with baking soda and coffee grounds to mask water damage odors, while using temporary sealants to hide rust and corrosion, selling dangerous vehicles that posed serious safety risks to unsuspecting buyers, according to Automotive Safety Investigation and Vehicle Condition Standards. The used car lot had been operating comprehensive flood damage concealment schemes where water-damaged vehicles would be treated with odor masking agents and temporary repairs while being sold as clean vehicles without flood damage disclosure despite automotive safety regulations and disclosure requirements that mandated honest vehicle condition reporting and flood damage identification, according to automotive sales standards and consumer protection requirements. The flood damage concealment operation involved targeted vehicle preparation fraud and condition misrepresentation while maintaining enough legitimate vehicle sales to avoid immediate detection by automotive oversight and dealer monitoring that relied on honest vehicle condition disclosure and safety standards compliance for customer protection and automotive sales integrity. The lot had been particularly focused on concealing extensive flood damage and electrical system problems while ensuring that damage concealment would be temporary enough to complete sales transactions, but long enough to avoid immediate detection of water damage and safety hazards, according to fraud concealment and customer deception techniques. The scheme extended to creating false vehicle history reports and condition documentation while coordinating damage concealment with sales processes to maximize vehicle sale prices while concealing actual vehicle condition and safety risks that would affect customer purchase decisions and vehicle reliability based on honest sales practices and accurate condition disclosure. The lot had also been manipulating vehicle inspection procedures and condition assessment processes to maintain concealment fraud while avoiding automotive oversight and dealer monitoring that would reveal flood damage concealment and safety violations that violated customer protection and automotive sales integrity standards. The flood damage concealment fraud was discovered when customers investigated vehicle problems and discovered water damage evidence, leading to evidence that revealed comprehensive automotive sales fraud and vehicle condition manipulation that violated automotive safety regulations and consumer protection standards. Our ninth story comes from tire customers who discovered their tire shop was puncturing tires during routine inspections to create sales opportunities, using subtle damage that would cause slow leaks and force customers to purchase replacement tires unnecessarily according to automotive service fraud investigation and tire safety standards. The tire shop had been operating comprehensive tire damage schemes where customers would bring vehicles for routine tire inspections while technicians would create small punctures and valve stem damage that would cause gradual air loss and tire failure despite service agreements and inspection procedures that should have identified actual tire condition and provided honest maintenance recommendations according to automotive service standards and customer protection requirements. The tire puncturing operation involved targeted damage creation and sales manipulation while maintaining enough legitimate tire services to avoid immediate detection by automotive oversight and service monitoring that relied on honest tire inspection and necessary replacement identification for customer protection and automotive service integrity. The shop had been particularly focused on damaging newer tires and premium brands while ensuring that puncture damage would appear as road hazard damage rather than deliberate sabotage that would raise customer suspicion and automotive oversight attention, according to service fraud concealment and customer deception techniques. The scheme extended to creating false tire inspection reports and damage documentation while coordinating tire puncturing with sales systems to maximize replacement tire revenue, while concealing deliberate tire damage and unnecessary replacement recommendations that would affect customer vehicle safety and financial security based on honest service provision and accurate tire assessment. The shop had also been manipulating tire inspection procedures and damage assessment protocols to maintain puncturing fraud while avoiding automotive oversight and service monitoring that would reveal deliberate tire damage and sales manipulation that violated customer protection and automotive service integrity standards. The tire puncturing fraud was discovered when customers investigated tire failures and discovered puncture patterns consistent with deliberate damage, leading to evidence that revealed comprehensive automotive service fraud and tire manipulation that violated automotive service regulations and customer protection standards. Our 10th story comes from insurance customers who discovered their auto body shop was billing insurance companies for brand new parts while actually installing used components from salvage yards, keeping the price difference while customers received inferior repairs with no warranty protection according to insurance fraud investigation and automotive repair standards. The auto body shop had been operating comprehensive parts fraud schemes where insurance claims would be processed for premium OEM replacement parts while customers received used salvage components that would fail quickly and compromise vehicle safety despite insurance coverage and repair agreements that specified quality parts installation and warranty protection according to automotive repair standards and insurance claim requirements. The used parts installation operation involved targeted insurance fraud and repair quality manipulation while maintaining enough legitimate repair work to avoid immediate detection by insurance oversight and repair monitoring that relied on honest parts installation and quality repair standards for customer protection and insurance industry integrity. The shop had been particularly focused on replacing expensive body panels and mechanical components while ensuring that parts fraud would be concealed through false installation documentation and manipulated repair records that would justify insurance payments despite inferior component quality that customers would discover only after repair failure and safety problems, according to repair fraud concealment and customer deception techniques. The scheme extended to creating false parts ordering records and installation documentation while coordinating used parts installation with insurance billing systems to maximize profit margins while concealing actual repair quality and parts installation that would affect vehicle safety and customer insurance coverage based on honest repair practices and quality parts installation. The shop had also been manipulating repair procedures and parts verification processes to maintain installation fraud while avoiding insurance oversight and repair monitoring that would reveal parts fraud and billing manipulation that violated customer protection and insurance industry integrity standards. The used parts installation fraud was discovered when customers investigated repair quality and discovered salvage components installation, leading to evidence that revealed comprehensive automotive repair fraud and parts manipulation that violated automotive repair regulations and insurance claim standards. Our 11th story comes from vehicle owners who discovered their dealership service department was recommending unnecessary transmission flushes and expensive fluid changes far more frequently than manufacturer specifications required, generating excessive revenue from customers who trusted their maintenance schedule recommendations according to automotive service fraud investigation and manufacturer maintenance standards. The service department had been operating comprehensive maintenance fraud schemes where customers would follow recommended service schedules while being charged for unnecessary procedures and excessive maintenance frequency that violated manufacturer guidelines and customer trust despite service agreements and maintenance contracts that should have followed factory specifications and honest maintenance recommendations according to automotive service standards and customer protection requirements. The unnecessary maintenance operation involved targeted service manipulation and billing fraud while maintaining enough legitimate maintenance work to avoid immediate detection by automotive oversight and service monitoring that relied on honest maintenance, scheduling, and manufacturer specification compliance for customer protection and automotive service integrity. The department had been particularly focused on recommending expensive transmission and cooling system services while ensuring that maintenance fraud would be justified through false technical explanations and manipulated service documentation that would convince customers of maintenance necessity despite manufacturer specifications that contradicted service recommendations according to service fraud concealment and customer deception techniques. The scheme extended to creating false maintenance requirement documentation and service scheduling while coordinating unnecessary procedures with service billing systems to maximize revenue collection while concealing actual maintenance requirements and manufacturer specifications that would affect customer service costs and vehicle maintenance based on honest service practices and accurate maintenance scheduling. The department had also been manipulating service consultation procedures and maintenance explanation processes to maintain scheduling fraud while avoiding automotive oversight and service monitoring that would reveal unnecessary maintenance recommendations and billing manipulation that violated customer protection and automotive service integrity standards. The unnecessary maintenance fraud was discovered when customers investigated manufacturer specifications and discovered excessive service recommendations, leading to evidence that revealed comprehensive automotive service fraud and maintenance manipulation that violated automotive service regulations and manufacturer specification standards. Our 12th story comes from car buyers who discovered their vehicle history report company was omitting accident records and flood damage information in exchange for payments from dealers, allowing damaged cars to be sold as clean vehicles to unsuspecting consumers according to automotive fraud investigation and vehicle history reporting standards. The history report company had been operating comprehensive information manipulation schemes where vehicle damage records would be concealed or omitted from history reports while dealers paid fees to hide accident damage and flood history despite reporting standards and consumer protection requirements that mandated complete vehicle history disclosure and accurate damage reporting according to automotive history reporting standards and consumer protection requirements. The information omission operation involved targeted data manipulation and reporting fraud while maintaining enough legitimate history reporting to avoid immediate detection by automotive oversight and reporting monitoring that relied on honest information disclosure and complete vehicle history reporting for consumer protection and automotive industry integrity. The company had been particularly focused on concealing extensive accident damage and flood history while ensuring that information omission would be concealed through selective data reporting and manipulated history documentation that would present vehicles as clean despite actual damage history that consumers would discover only after purchase completion and ownership problems according to reporting fraud concealment and consumer deception techniques. The scheme extended to creating false vehicle history databases and reporting systems while coordinating information omission with dealer payment systems to maximize revenue collection while concealing actual vehicle history and damage records that would affect consumer purchase decisions and vehicle value based on honest reporting practices and complete history disclosure. The company had also been manipulating reporting procedures and information verification processes to maintain omission fraud while avoiding automotive oversight and reporting monitoring that would reveal information manipulation and reporting fraud that violated consumer protection and automotive history reporting integrity standards. The information omission fraud was discovered when consumers investigated vehicle problems and discovered concealed damage history, leading to evidence that revealed comprehensive automotive reporting fraud and information manipulation that violated automotive history reporting regulations and consumer protection standards. Our 13th story comes from customers who discovered their auto parts store was selling counterfeit brake pads and safety components labeled as genuine OEM parts, putting drivers at risk while charging premium prices for dangerous imitation products according to automotive safety investigation and parts quality standards. The auto parts store had been operating comprehensive counterfeit parts schemes where customers would purchase safety-critical components believing they were genuine OEM parts, while receiving dangerous imitations that would fail under stress and compromise vehicle safety despite parts packaging and documentation that falsely represented component authenticity and quality according to automotive parts standards and safety requirements. The counterfeit parts operation involved targeted product fraud and safety manipulation while maintaining enough legitimate parts sales to avoid immediate detection by automotive oversight and parts monitoring that relied on genuine component distribution and safety standards compliance for customer protection and automotive parts industry integrity. The store had been particularly focused on selling counterfeit brake components and steering parts while ensuring that parts fraud would be concealed through false packaging and manipulated documentation that would convince customers of component authenticity, despite inferior manufacturing and safety testing that would compromise vehicle operation according to parts fraud concealment and customer endangerment techniques. The scheme extended to creating false parts certification and quality documentation, while coordinating counterfeit sales with inventory systems to maximize profit margins, while concealing actual component quality and safety standards that would affect customer vehicle safety and legal compliance based on honest parts distribution and genuine component sales. The store had also been manipulating parts sourcing procedures and quality verification processes to maintain counterfeit fraud while avoiding automotive oversight and parts monitoring that would reveal component fraud and safety violations that violated customer protection and automotive parts integrity standards. The counterfeit parts fraud was discovered when customers investigated component failures and discovered imitation parts installation, leading to evidence that revealed comprehensive automotive parts fraud and safety manipulation that violated automotive safety regulations and parts quality standards. Our 14th story comes from vehicle owners who discovered their mechanic was diagnosing non-existent problems by tampering with diagnostic computers to generate false error codes, convincing customers they needed expensive repairs for issues that never actually existed on their vehicles according to automotive service fraud investigation and diagnostic standards. The mechanic had been operating comprehensive diagnostic fraud schemes where customers would bring vehicles for routine inspections while diagnostic equipment would be manipulated to display false error codes and system failures that would justify expensive repairs and parts replacement despite vehicle systems that were functioning properly according to manufacturer specifications and diagnostic standards. The diagnostic tampering operation involved targeted equipment manipulation and repair fraud while maintaining enough legitimate diagnostic work to avoid immediate detection by automotive oversight and service monitoring that relied on honest diagnostic procedures and accurate problem identification for customer protection and automotive service integrity. The mechanic had been particularly focused on generating expensive engine and transmission error codes while ensuring that diagnostic fraud would be convincing through false technical explanations and manipulated diagnostic reports that would justify repair recommendations despite actual vehicle condition that contradicted diagnostic findings according to service fraud concealment and customer deception techniques. The scheme extended to creating false diagnostic documentation and repair estimates while coordinating equipment tampering with service billing systems to maximize repair revenue, while concealing actual vehicle condition and diagnostic results that would affect customer repair decisions and vehicle maintenance based on honest diagnostic practices and accurate problem identification. The mechanic had also been manipulating diagnostic procedures and equipment calibration processes to maintain tampering fraud while avoiding automotive oversight and service monitoring that would reveal diagnostic manipulation and repair fraud that violated customer protection and automotive service integrity standards. The diagnostic tampering fraud was discovered when customers sought second opinions and discovered normal vehicle operation, leading to evidence that revealed comprehensive automotive service fraud and diagnostic manipulation that violated automotive service regulations and diagnostic standards. Our 15th story comes from car wash customers who discovered their car wash service was applying acidic chemicals that gradually damaged paint and trim to create demand for their expensive restoration services, causing long-term damage while appearing to provide routine cleaning according to automotive service fraud investigation and vehicle care standards. The car wash service had been operating comprehensive damage creation schemes where customers would pay for routine vehicle cleaning while acidic chemicals would be applied to paint surfaces and trim components that would cause gradual deterioration and aesthetic damage despite service agreements and cleaning procedures that should have protected vehicle finish and maintained appearance according to automotive care standards and customer protection requirements. The chemical damage operation involved targeted finish destruction and service manipulation while maintaining enough legitimate cleaning services to avoid immediate detection by automotive oversight and service monitoring that relied on honest vehicle care and protective cleaning practices for customer protection and automotive service integrity. The service had been particularly focused on damaging expensive vehicle paint and chrome trim while ensuring that chemical damage would appear as normal wear and environmental exposure rather than deliberate finish destruction that would raise customer suspicion and automotive oversight attention according to service fraud concealment and customer deception techniques. The scheme extended to creating false cleaning product documentation and service procedures while coordinating chemical damage with restoration service promotion to maximize revenue collection while concealing deliberate finish damage and cleaning fraud that would affect vehicle appearance and resale value based on honest service provision and protective vehicle care. The service had also been manipulating cleaning procedures and chemical application processes to maintain damage fraud while avoiding automotive oversight and service monitoring that would reveal deliberate finish damage and service manipulation that violated customer protection and automotive service integrity standards. The chemical damage fraud was discovered when customers investigated paint deterioration and discovered acidic residue evidence, leading to evidence that revealed comprehensive automotive service fraud and finish manipulation that violated automotive service regulations and vehicle care standards. Our 16th story comes from parking customers who discovered their garage attendant was copying house keys from customer key rings while vehicles were parked, later burglarizing homes when owners were known to be away at work or traveling according to criminal investigation and parking facility security standards. The parking attendant had been operating comprehensive burglary schemes where customers would park vehicles and leave complete key sets while the attendant would copy house keys and garage door openers to access customer homes during predictable absence periods. Despite parking agreements and security procedures that should have protected customer property and maintained key security according to parking facility standards and customer protection requirements. The key copying operation involved targeted property access fraud and burglary preparation while maintaining enough legitimate parking services to avoid immediate detection by facility oversight and security monitoring that relied on honest key handling and customer property protection for parking facility integrity and customer security. The attendant had been particularly focused on copying keys belonging to affluent customers and frequent parkers while ensuring that key copying would be concealed through normal parking procedures and routine key handling that would not raise customer suspicion during vehicle retrieval according to burglary fraud concealment and customer targeting techniques. The scheme extended to creating false parking records and customer information documentation while coordinating key copying with burglary planning to maximize theft opportunities while concealing actual key handling and property access that would affect customer home security and personal safety based on honest parking services and secure key management. The attendant had also been manipulating parking procedures and key storage processes to maintain copying fraud while avoiding facility oversight and security monitoring that would reveal key manipulation and burglary preparation that violated customer protection and parking facility integrity standards. The key copying fraud was discovered when customers investigated home burglaries and discovered parking facility connections, leading to evidence that revealed comprehensive property crime and key manipulation that violated criminal law and parking facility security standards. Our 17th story comes from insurance customers who discovered their auto insurance agent was pocketing premium payments while allowing policies to lapse, leaving customers uninsured without their knowledge until accidents occurred and claims were denied for non-payment according to insurance fraud investigation and coverage protection standards. The insurance agent had been operating comprehensive premium theft schemes where customers would make regular policy payments while the agent would keep premium money and allow insurance coverage to lapse without customer notification despite insurance agreements and payment processing procedures that should have maintained continuous coverage and policy protection according to insurance industry standards and customer protection requirements. The premium theft operation involved targeted payment manipulation and coverage fraud while maintaining enough legitimate insurance processing to avoid immediate detection by insurance company oversight and agent monitoring that relied on honest premium handling and policy maintenance for customer protection and insurance industry integrity. The agent had been particularly focused on targeting customers with automatic payment arrangements and infrequent policy reviews while ensuring that premium theft would be concealed through false payment confirmations and manipulated policy documentation that would maintain the appearance of active coverage according to insurance fraud concealment and customer deception techniques. The scheme extended to creating false premium payment records and policy status documentation while coordinating payment theft with coverage cancellation to maximize stolen premium amounts while concealing actual policy status and coverage lapses that would affect customer protection and claim eligibility based on honest insurance practices and continuous coverage maintenance. The agent had also been manipulating policy renewal procedures and payment processing systems to maintain theft fraud while avoiding insurance company oversight and agent monitoring that would reveal premium manipulation and coverage fraud that violated customer protection and insurance industry integrity standards. The premium theft fraud was discovered when customers filed claims and discovered policy lapses, leading to evidence that revealed comprehensive insurance fraud and premium manipulation that violated insurance regulations and customer protection standards. Our 18th story comes from stranded motorists who discovered their roadside assistance company was deliberately causing minor breakdowns during service calls to justify expensive towing fees and repair recommendations, targeting vulnerable drivers in remote locations according to automotive service fraud investigation and roadside assistance standards. The roadside assistance company had been operating comprehensive breakdown creation schemes where customers would call for legitimate assistance while technicians would cause additional problems and mechanical failures that would require expensive towing and repair services despite service agreements and assistance procedures that should have provided honest help and emergency support according to roadside assistance standards and customer protection requirements. The breakdown creation operation involved targeted vehicle sabotage and service manipulation while maintaining enough legitimate assistance calls to avoid immediate detection by automotive oversight and assistance monitoring that relied on honest emergency services and customer support for roadside assistance integrity and customer protection. The company had been particularly focused on targeting isolated customers and expensive vehicle owners while ensuring that breakdown creation would appear as coincidental mechanical failures rather than deliberate sabotage that would raise customer suspicion and automotive oversight attention according to service fraud concealment and customer exploitation techniques. The scheme extended to creating false service call documentation and breakdown reports while coordinating vehicle sabotage with towing revenue systems to maximize fee collection while concealing deliberate breakdown creation and assistance fraud that would affect customer emergency support and vehicle reliability based on honest assistance provision and emergency service delivery. The company had also been manipulating service call procedures and assistance protocols to maintain sabotage fraud while avoiding automotive oversight and assistance monitoring that would reveal breakdown creation and service manipulation that violated customer protection and roadside assistance integrity standards. The breakdown creation fraud was discovered when customers investigated service patterns and discovered deliberate vehicle damage, leading to evidence that revealed comprehensive roadside assistance fraud and breakdown manipulation that violated automotive service regulations and emergency assistance standards. Our 19th story comes from vehicle owners who discovered their vehicle inspection station was passing dangerous cars in exchange for bribes, while failing safe vehicles to force unnecessary repairs, compromising road safety while generating illegal revenue streams according to automotive safety investigation and vehicle inspection standards. The inspection station had been operating comprehensive safety fraud schemes where vehicle owners would pay bribes to pass safety inspections despite serious mechanical problems and safety violations, while honest customers would have safe vehicles failed to generate repair business despite inspection procedures and safety standards that should have identified actual vehicle problems and protected road safety according to automotive inspection standards and public safety requirements. The inspection bribery operation involved targeted safety manipulation and regulatory fraud while maintaining enough legitimate inspection services to avoid immediate detection by automotive oversight and inspection monitoring that relied on honest safety assessment and regulatory compliance for public protection and automotive inspection integrity. The station had been particularly focused on passing vehicles with brake failures and steering problems while ensuring that bribery fraud would be concealed through false inspection documentation and manipulated safety records that would justify inspection certificates despite actual vehicle condition that posed serious safety risks according to inspection fraud concealment and public endangerment techniques. The scheme extended to creating false safety inspection reports and certification documentation while coordinating bribery acceptance with inspection revenue systems to maximize illegal fee collection while concealing actual vehicle safety assessment and inspection standards that would affect public road safety and regulatory compliance based on honest inspection practices and accurate safety evaluation. The station had also been manipulating inspection procedures and safety assessment protocols to maintain bribery fraud while avoiding automotive oversight and inspection monitoring that would reveal safety manipulation and certification fraud that violated public protection and automotive inspection integrity standards. The inspection bribery fraud was discovered when customers investigated safety problems and discovered inspection irregularities, leading to evidence that revealed comprehensive automotive inspection fraud and safety manipulation that violated automotive safety regulations and public protection standards. Our 20th story comes from car buyers who discovered their dealership was advertising vehicles at artificially low prices but switching customers to higher-priced models during negotiations, using bait-and-switch tactics that violated advertising regulations and consumer protection laws according to automotive sales fraud investigation and advertising standards. The dealership had been operating comprehensive pricing fraud schemes where customers would respond to advertised vehicle prices while being directed to more expensive models through false availability claims and manipulated financing options despite advertising agreements and sales procedures that should have honored advertised prices and provided transparent vehicle availability according to automotive sales standards and consumer protection requirements. The bait-and-switch operation involved targeted advertising manipulation and sales fraud while maintaining enough legitimate vehicle sales to avoid immediate detection by automotive oversight and sales monitoring that relied on honest advertising practices and price transparency for consumer protection and automotive sales integrity. The dealership had been particularly focused on advertising popular models at below-market prices while ensuring that price switching would be justified through false inventory claims and manipulated financing presentations that would direct customers to higher-profit vehicles according to sales fraud concealment and consumer deception techniques. The scheme extended to creating false advertising documentation and inventory records while coordinating price switching with sales commission systems to maximize profit margins while concealing actual vehicle availability and pricing practices that would affect consumer purchase decisions and advertising compliance based on honest sales practices and accurate price advertising. The dealership had also been manipulating sales consultation procedures and price negotiation processes to maintain switching fraud while avoiding automotive oversight and sales monitoring that would reveal advertising manipulation and pricing fraud that violated consumer protection and automotive sales integrity standards. The bait-and-switch fraud was discovered when customers investigated advertised vehicle availability and discovered false pricing practices, leading to evidence that revealed comprehensive automotive sales fraud and advertising manipulation that violated automotive sales regulations and consumer protection standards. Our 21st story comes from loan customers who discovered their auto loan refinancing company was charging excessive fees while providing minimal interest rate reductions, trapping customers in longer payment terms that ultimately cost thousands more than original loans, according to Automotive Financing Fraud Investigation and Lending Standards. The refinancing company had been operating comprehensive fee fraud schemes where customers would seek lower interest rates while being charged excessive processing fees and extended payment terms that would increase total loan costs despite refinancing agreements and lending procedures that should have provided genuine savings and transparent fee disclosure according to automotive lending standards and consumer protection requirements. The excessive fee operation involved targeted loan manipulation and cost concealment while maintaining enough legitimate refinancing services to avoid immediate detection by lending oversight and refinancing monitoring that relied on honest fee disclosure and genuine savings provision for consumer protection and lending industry integrity. The company had been particularly focused on targeting customers with good payment histories and stable employment while ensuring that fee fraud would be concealed through complex loan calculations and manipulated savings presentations that would disguise actual refinancing costs according to lending fraud concealment and consumer deception techniques. The scheme extended to creating false savings calculations and fee documentation while coordinating excessive charges with loan processing systems to maximize fee revenue while concealing actual refinancing costs and payment terms that would affect consumer loan decisions and financial obligations based on honest lending practices and transparent fee disclosure. The company had also been manipulating loan consultation procedures and refinancing explanation processes to maintain fee fraud while avoiding lending oversight and refinancing monitoring that would reveal fee manipulation and cost concealment that violated consumer protection and lending industry integrity standards. The excessive fee fraud was discovered when customers calculated actual loan costs and discovered minimal savings, leading to evidence that revealed comprehensive automotive lending fraud and fee manipulation that violated lending regulations and consumer protection standards. Our 22nd story comes from collision customers who discovered their repair shop was intentionally causing additional damage during repairs to justify higher bills, using hammers and other tools to create problems that required expensive solutions according to Automotive Repair Fraud Investigation and Collision Repair Standards. The collision repair shop had been operating comprehensive damage creation schemes where customers would bring vehicles for accident repairs while technicians would cause additional damage to body panels and mechanical components that would justify expanded repair estimates and parts replacement despite repair agreements and insurance procedures that should have limited repairs to actual accident damage according to automotive repair standards and insurance claim requirements. The intentional damage operation involved targeted vehicle destruction and billing manipulation while maintaining enough legitimate collision repair work to avoid immediate detection by insurance oversight and repair monitoring that relied on honest damage assessment and necessary repair identification for customer protection and automotive repair integrity. The shop had been particularly focused on creating expensive frame damage and mechanical problems, while ensuring that additional damage would appear as hidden accident damage rather than deliberate destruction that would raise insurance adjuster suspicion and automotive oversight attention, according to repair fraud concealment and customer exploitation techniques. The scheme extended to creating false damage assessment reports and repair documentation while coordinating intentional damage with insurance billing systems to maximize claim payments while concealing deliberate vehicle destruction and repair fraud that would affect customer vehicle safety and insurance coverage based on honest repair practices and accurate damage assessment. The shop had also been manipulating repair procedures and damage evaluation processes to maintain destruction fraud while avoiding insurance oversight and repair monitoring that would reveal intentional damage creation and billing manipulation that violated customer protection and automotive repair integrity standards. The intentional damage fraud was discovered when customers investigated repair quality and discovered tool marks consistent with deliberate damage, leading to evidence that revealed comprehensive automotive repair fraud and damage manipulation that violated automotive repair regulations and insurance claim standards. Our 23rd story comes from oil change customers who discovered their mechanic was mixing used oil with new oil during oil changes while charging full price for premium synthetic lubricants, endangering engines while deceiving customers about the quality of service provided according to automotive service fraud investigation and maintenance standards. The mechanic had been operating comprehensive oil fraud schemes where customers would pay for premium synthetic oil changes while receiving mixtures of used and new oil that would compromise engine protection and lubrication despite service agreements and maintenance procedures that specified complete oil replacement and quality lubricant installation according to automotive service standards and engine protection requirements. The oil mixing operation involved targeted product fraud and service manipulation while maintaining enough legitimate oil change services to avoid immediate detection by automotive oversight and service monitoring that relied on honest oil replacement and quality lubricant usage for customer protection and automotive service integrity. The mechanic had been particularly focused on targeting customers requesting expensive synthetic oil changes while ensuring that oil fraud would be concealed through false service documentation and manipulated maintenance records that would justify premium pricing despite inferior oil quality that would compromise engine performance according to service fraud concealment and customer deception techniques. The scheme extended to creating false oil purchase records and service documentation while coordinating oil mixing with service billing systems to maximize profit margins while concealing actual oil quality and service procedures that would affect customer engine protection and maintenance costs based on honest service provision and quality oil installation. The mechanic had also been manipulating oil change procedures and quality verification processes to maintain mixing fraud while avoiding automotive oversight and service monitoring that would reveal oil fraud and service manipulation that violated customer protection and automotive service integrity standards. The oil mixing fraud was discovered when customers investigated engine problems and discovered contaminated oil evidence, leading to evidence that revealed comprehensive automotive service fraud and oil manipulation that violated automotive service regulations and maintenance standards. Our 24th story comes from auction participants who discovered their auto auction was allowing dealers to bid on vehicles they already owned to artificially inflate prices, manipulating market values while deceiving legitimate buyers about actual vehicle worth according to automotive auction fraud investigation and market integrity standards. The auto auction had been operating comprehensive price manipulation schemes where dealers would place false bids on their own vehicles, while legitimate buyers would pay inflated prices based on artificial bidding activity despite auction procedures and market regulations that should have prevented seller bidding and maintained honest price discovery according to automotive auction standards and market protection requirements. The artificial bidding operation involved targeted price fraud and market manipulation while maintaining enough legitimate auction activity to avoid immediate detection by auction oversight and market monitoring that relied on honest bidding practices and transparent price discovery for buyer protection and automotive auction integrity. The auction had been particularly focused on inflating prices for luxury vehicles and classic cars while ensuring that bidding fraud would be concealed through complex bidding procedures and manipulated participant documentation that would disguise dealer ownership and bidding relationships according to auction fraud concealment and buyer deception techniques. The scheme extended to creating false bidder registration and vehicle ownership records while coordinating artificial bidding with auction revenue systems to maximize commission earnings while concealing actual vehicle ownership and bidding practices that would affect buyer purchase decisions and market pricing based on honest auction practices and transparent bidding procedures. The auction had also been manipulating bidding procedures and participant verification processes to maintain price fraud while avoiding auction oversight and market monitoring that would reveal bidding manipulation and price inflation that violated buyer protection and automotive auction integrity standards. The artificial bidding fraud was discovered when buyers investigated vehicle ownership history and discovered dealer bidding patterns, leading to evidence that revealed comprehensive automotive auction fraud and price manipulation that violated auction regulations and market integrity standards. Our 25th story comes from rental customers who discovered their car rental company was disabling safety features like airbags and ABS systems to reduce maintenance costs while continuing to rent vehicles that posed serious dangers to unsuspecting customers according to automotive safety investigation and rental vehicle standards. The car rental company had been operating comprehensive safety fraud schemes where rental vehicles would have critical safety systems disabled or removed while customers would drive vehicles believing they had full safety protection despite rental agreements and vehicle standards that guaranteed functional safety equipment and regulatory compliance according to automotive rental standards and customer safety requirements. The safety disabling operation involved targeted equipment manipulation and cost reduction while maintaining enough legitimate rental operations to avoid immediate detection by rental industry oversight and safety monitoring that relied on functional safety systems and regulatory compliance for customer protection and rental industry integrity. The company had been particularly focused on disabling expensive safety components and electronic systems while ensuring that safety fraud would be concealed through false vehicle inspection documentation and manipulated maintenance records that would indicate functional safety equipment according to rental fraud concealment and customer endangerment techniques. The scheme extended to creating false safety inspection reports and maintenance documentation while coordinating safety disabling with cost reduction systems to maximize profit margins while concealing actual vehicle safety condition and equipment functionality that would affect customer safety and regulatory compliance based on honest rental practices and functional safety equipment. The company had also been manipulating vehicle preparation procedures and safety verification processes to maintain disabling fraud while avoiding rental industry oversight and safety monitoring that would reveal safety manipulation and equipment fraud that violated customer protection and rental industry integrity standards. The safety disabling fraud was discovered when customers investigated accident outcomes and discovered disabled safety equipment, leading to evidence that revealed comprehensive rental vehicle fraud and safety manipulation that violated automotive safety regulations and rental industry standards. Our 26th story comes from vehicle buyers who discovered their salvage yard was selling flood-damaged vehicles to unsuspecting rebuilders while falsifying damage reports, allowing dangerous cars to re-enter the market with clean titles and hidden structural problems according to automotive safety investigation and salvage industry standards. The salvage yard had been operating comprehensive damage concealment schemes where flood-damaged vehicles would be sold as minor collision damage while extensive water damage and electrical problems would be concealed from rebuilders and eventual buyers, despite salvage procedures and disclosure requirements that mandated honest damage reporting and safety assessment according to salvage industry standards and vehicle safety requirements. The damage falsification operation involved targeted report manipulation and safety fraud while maintaining enough legitimate salvage operations to avoid immediate detection by salvage industry oversight and vehicle monitoring that relied on honest damage assessment and accurate condition reporting for rebuilder protection and automotive safety integrity. The yard had been particularly focused on concealing extensive flood damage and electrical system destruction while ensuring that damage fraud would be justified through false inspection reports and manipulated vehicle documentation that would indicate minor reparable damage according to salvage fraud concealment and rebuilder deception techniques. The scheme extended to creating false damage assessment reports and vehicle condition documentation while coordinating damage concealment with salvage revenue systems to maximize vehicle sale prices while concealing actual damage extent and safety risks that would affect rebuilder decisions and eventual vehicle safety based on honest salvage practices and accurate damage disclosure. The yard had also been manipulating vehicle inspection procedures and damage evaluation processes to maintain concealment fraud while avoiding salvage industry oversight and vehicle monitoring that would reveal damage falsification and safety violations that violated rebuilder protection and salvage industry integrity standards. The damage concealment fraud was discovered when rebuilders investigated vehicle problems and discovered extensive hidden damage, leading to evidence that revealed comprehensive salvage industry fraud and damage manipulation that violated automotive safety regulations and salvage industry standards. Our 27th story comes from windshield customers who discovered their auto glass company was cracking windshields during routine inspections to generate replacement business, using specialized tools to create stress fractures that would spread and require expensive repairs according to automotive service fraud investigation and glass repair standards. The auto glass company had been operating comprehensive damage creation schemes where customers would request windshield inspections while technicians would create small cracks and stress points that would expand over time, and require complete windshield replacement despite inspection procedures and service agreements that should have identified existing damage without creating additional problems according to automotive glass standards and customer protection requirements. The windshield cracking operation involved targeted damage creation and service manipulation while maintaining enough legitimate glass repair services to avoid immediate detection by automotive oversight and service monitoring that relied on honest damage assessment and necessary repair identification for customer protection and automotive service integrity. The company had been particularly focused on creating cracks in expensive luxury vehicle windshields while ensuring that damage creation would appear as natural stress fractures rather than deliberate sabotage that would raise customer suspicion and automotive oversight attention according to service fraud concealment and customer exploitation techniques. The scheme extended to creating false inspection reports and damage documentation while coordinating windshield cracking with replacement service promotion to maximize revenue collection while concealing deliberate damage creation and service fraud that would affect customer vehicle safety and repair costs based on honest service provision and accurate damage assessment. The company had also been manipulating inspection procedures and damage evaluation processes to maintain cracking fraud while avoiding automotive oversight and service monitoring that would reveal deliberate damage creation and service manipulation that violated customer protection and automotive service integrity standards. The windshield cracking fraud was discovered when customers investigated crack patterns and discovered tool marks consistent with deliberate damage, leading to evidence that revealed comprehensive automotive service fraud and damage manipulation that violated automotive service regulations and glass repair standards. Our 28th story comes from vehicle transport customers who discovered their vehicle transport company was allowing drivers to use customer cars for personal errands while claiming delays were due to mechanical problems, adding unauthorized mileage and where to transported vehicles according to automotive transport fraud investigation and shipping standards. The vehicle transport company had been operating comprehensive usage fraud schemes where customer vehicles would be used for personal transportation and errands while transport delays would be blamed on mechanical problems and route difficulties despite transport agreements and shipping procedures that specified direct delivery and vehicle protection during transit according to automotive transport standards and customer property protection requirements. The unauthorized usage operation involved targeted vehicle exploitation and service manipulation while maintaining enough legitimate transport services to avoid immediate detection by transport industry oversight and shipping monitoring that relied on honest vehicle handling and direct delivery practices for customer protection and transport industry integrity. The company had been particularly focused on using luxury vehicles and sports cars for personal transportation while ensuring that usage fraud would be concealed through false delay explanations and manipulated delivery documentation that would justify extended transport times according to transport fraud concealment and customer deception techniques. The scheme extended to creating false mechanical problem reports and delay documentation while coordinating unauthorized usage with delivery scheduling systems to maximize personal vehicle access while concealing actual vehicle usage and transport practices that would affect customer vehicle condition and delivery expectations based on honest transport services and direct vehicle delivery. The company had also been manipulating transport procedures and delivery tracking processes to maintain usage fraud while avoiding transport industry oversight and shipping monitoring that would reveal unauthorized vehicle usage and service manipulation that violated customer protection and transport industry integrity standards. The unauthorized usage fraud was discovered when customers investigated vehicle mileage and discovered excessive wear patterns, leading to evidence that revealed comprehensive vehicle transport fraud and usage manipulation that violated transport regulations and customer property protection standards. Our 29th story comes from loan applicants who discovered their dealership finance manager was selling customer information to identity thieves while processing loan applications, compromising personal data and enabling financial fraud that devastated victims' credit ratings according to identity theft investigation and financial privacy standards. The finance manager had been operating comprehensive data theft schemes where customers would provide personal information for vehicle financing, while the manager would sell social security numbers and financial details to criminal networks despite privacy agreements and data protection procedures, that should have secured customer information and prevented unauthorized disclosure according to financial privacy standards and customer data protection requirements. The information theft operation involved targeted data exploitation and privacy violation while maintaining enough legitimate financing services to avoid immediate detection by dealership oversight and finance monitoring that relied on honest data handling and customer privacy protection for consumer protection and automotive finance integrity. The manager had been particularly focused on selling information belonging to customers with excellent credit and high incomes, while ensuring that data theft would be concealed through normal financing procedures and routine information handling that would not raise customer suspicion during loan processing according to identity fraud concealment and customer targeting techniques. The scheme extended to creating false data security protocols and information handling procedures while coordinating data theft with criminal payment systems to maximize illegal revenue while concealing actual information usage and privacy. Violations that would affect customer financial security and personal safety based on honest financing practices and secure data handling. The manager had also been manipulating loan application procedures and information verification processes to maintain theft fraud while avoiding dealership oversight and finance monitoring that would reveal data manipulation and privacy violations that violated customer protection and automotive finance integrity standards. The information theft fraud was discovered when customers investigated identity theft incidents and discovered financing application connections, leading to evidence that revealed comprehensive financial fraud and data manipulation that violated privacy regulations and customer protection standards. Our 30th story comes from parts customers who discovered their auto parts recycler was selling damaged components as fully functional replacements while providing false warranties, leaving customers with parts that failed immediately after installation according to automotive parts fraud investigation and recycling industry standards. The auto parts recycler had been operating comprehensive parts fraud schemes where customers would purchase used components believing they were tested and functional while receiving damaged parts that would fail quickly and require immediate replacement despite parts agreements and warranty procedures that guaranteed component functionality and replacement protection according to automotive recycling standards and customer protection requirements. The damaged parts operation involved targeted component fraud and warranty manipulation while maintaining enough legitimate parts recycling to avoid immediate detection by recycling industry oversight and parts monitoring that relied on honest component testing and accurate condition assessment for customer protection and recycling industry integrity. The recycler had been particularly focused on selling expensive engine and transmission components while ensuring that parts fraud would be concealed through false testing documentation and manipulated warranty terms that would indicate component functionality despite actual damage, and where that would cause immediate failure according to parts fraud concealment and customer deception techniques. The scheme extended to creating false component testing records and warranty documentation while coordinating damaged parts sales with warranty denial systems to maximize parts revenue while avoiding warranty claims and replacement obligations that would affect customer parts reliability and financial security based on honest recycling practices and functional component sales. The recycler had also been manipulating parts testing procedures and warranty verification processes to maintain fraud while avoiding recycling industry oversight and parts monitoring that would reveal component fraud and warranty manipulation that violated customer protection and recycling industry integrity standards. The damaged parts fraud was discovered when customers investigated component failures and discovered pre-existing damage evidence, leading to evidence that revealed comprehensive automotive recycling fraud and parts manipulation that violated recycling industry regulations and customer protection standards. Our 31st story comes from subscription customers who discovered their vehicle subscription service was automatically renewing contracts and charging credit cards without authorization, using buried terms and conditions to justify fraudulent billing practices according to consumer protection investigation and subscription service standards. The vehicle subscription service had been operating comprehensive billing fraud schemes where customers would sign limited-term agreements while automatic renewals would continue indefinitely with credit card charges despite subscription agreements and cancellation procedures that should have allowed easy termination and prevented unauthorized billing according to subscription service standards and consumer protection requirements. The automatic renewal operation involved targeted contract manipulation and billing fraud while maintaining enough legitimate subscription services to avoid immediate detection by consumer protection oversight and subscription monitoring that relied on honest contract terms and transparent billing practices for customer protection and subscription industry integrity. The service had been particularly focused on targeting customers who rarely reviewed credit card statements while ensuring that renewal fraud would be concealed through complex contract language and manipulated billing notifications that would disguise unauthorized charges according to subscription fraud concealment and customer exploitation techniques. The scheme extended to creating false contract documentation and billing authorization records while coordinating automatic renewals with payment processing systems to maximize subscription revenue, while concealing actual contract terms and billing practices that would affect customer subscription control and financial obligations based on honest subscription practices and transparent contract terms. The service had also been manipulating subscription procedures and cancellation processes to maintain renewal fraud while avoiding consumer protection oversight and subscription monitoring that would reveal billing manipulation and contract fraud that violated customer protection and subscription industry integrity standards. The automatic renewal fraud was discovered when customers investigated credit card charges and discovered unauthorized subscription billing, leading to evidence that revealed comprehensive subscription service fraud and billing manipulation that violated consumer protection regulations and subscription service standards. Our 30-second story comes from battery customers who discovered their mechanic was replacing good batteries with defective ones during routine maintenance, then selling the original batteries while customers paid for replacements that failed within weeks of installation according to automotive service fraud investigation and battery replacement standards. The mechanic had been operating comprehensive battery fraud schemes where customers would bring vehicles for routine maintenance, while functional batteries would be replaced with defective units that would fail quickly and require additional replacement despite service agreements and maintenance procedures that specified necessary component replacement and quality parts installation according to automotive service standards and customer protection requirements. The battery replacement operation involved targeted component theft and service manipulation while maintaining enough legitimate maintenance work to avoid immediate detection by automotive oversight and service monitoring that relied on honest component assessment and necessary replacement identification for customer protection and automotive service integrity. The mechanic had been particularly focused on targeting newer vehicles with expensive batteries while ensuring that battery fraud would be concealed through false diagnostic reports and manipulated maintenance documentation that would justify replacement necessity despite actual battery condition that contradicted replacement recommendations according to service fraud concealment and customer deception techniques. The scheme extended to creating false battery testing records and replacement documentation while coordinating battery theft with parts resale systems to maximize profit margins while concealing actual battery condition and replacement practices that would affect customer vehicle reliability and maintenance costs based on honest service provision and necessary component replacement. The mechanic had also been manipulating maintenance procedures and battery testing processes to maintain replacement fraud while avoiding automotive oversight and service monitoring that would reveal battery manipulation and service fraud that violated customer protection and automotive service integrity standards. The battery replacement fraud was discovered when customers investigated battery failures and discovered installation of defective components, leading to evidence that revealed comprehensive automotive service fraud and battery manipulation that violated automotive service regulations and maintenance standards. Our 33rd story comes from roadside assistance customers who discovered their auto club membership company was providing false roadside assistance locations and estimated arrival times, leaving stranded motorists waiting for help that never arrived while charging monthly membership fees according to automotive assistance fraud investigation and emergency service standards. The Auto Club company had been operating comprehensive assistance fraud schemes where customers would pay membership fees for emergency roadside support while receiving false location information and arrival estimates that would leave motorists stranded without actual help despite membership agreements and assistance procedures that guaranteed timely emergency support and accurate service delivery according to roadside assistance standards and customer protection requirements. The false assistance operation involved targeted service manipulation and emergency fraud while maintaining enough legitimate assistance calls to avoid immediate detection by assistance industry oversight and emergency service monitoring that relied on honest assistance provision and accurate service delivery for customer protection and assistance industry integrity. The company had been particularly focused on targeting isolated locations and vulnerable customers while ensuring that assistance fraud would be concealed through false dispatch documentation and manipulated service records that would indicate assistance attempts despite no actual service provision, according to assistance fraud concealment and customer abandonment techniques. The scheme extended to creating false assistance call logs and service documentation while coordinating assistance fraud with membership billing systems to maximize membership revenue while avoiding actual service costs and assistance obligations that would affect customer emergency support and safety security based on honest assistance practices and reliable emergency service provision. The company had also been manipulating assistance procedures and dispatch processes to maintain fraud while avoiding assistance industry oversight and emergency service monitoring that would reveal assistance manipulation and service fraud that violated customer protection and assistance industry integrity standards. The false assistance fraud was discovered when customers investigated assistance failures and discovered no actual service attempts, leading to evidence that revealed comprehensive roadside assistance fraud and service manipulation that violated emergency service regulations and customer protection standards. Our 34th story comes from performance customers who discovered their vehicle modification shop was installing counterfeit performance parts while charging premium prices for genuine components, providing products that failed under stress and potentially caused dangerous mechanical failures, according to Automotive Modification Fraud Investigation and Performance Parts Standards. The modification shop had been operating comprehensive parts fraud schemes where customers would pay premium prices for genuine performance components while receiving counterfeit parts that would fail under performance conditions and compromise vehicle safety despite modification agreements and parts warranties that specified authentic component installation and performance reliability according to Automotive modification standards and customer safety requirements. The counterfeit installation operation involved targeted product fraud and performance manipulation while maintaining enough legitimate modification work to avoid immediate detection by automotive oversight and modification monitoring that relied on genuine parts installation and performance standards compliance for customer protection and modification industry integrity. The shop had been particularly focused on installing counterfeit turbochargers and suspension components while ensuring that parts fraud would be concealed through false parts documentation and manipulated installation records that would indicate genuine component installation despite inferior manufacturing and performance testing that would compromise vehicle operation according to modification fraud concealment and customer endangerment techniques. The scheme extended to creating false parts certification and performance documentation while coordinating counterfeit installation with modification billing systems to maximize profit margins while concealing actual component quality and performance standards that would affect customer vehicle performance and safety compliance based on honest modification practices and genuine parts installation. The shop had also been manipulating modification procedures and parts verification processes to maintain counterfeit fraud while avoiding automotive oversight and modification monitoring that would reveal parts fraud and performance violations that violated customer protection and modification industry integrity standards. The counterfeit parts fraud was discovered when customers investigated performance failures and discovered imitation component installation, leading to evidence that revealed comprehensive automotive modification fraud and parts manipulation that violated modification industry regulations and performance standards. Our 35th story comes from trade-in customers who discovered their car dealership was manipulating trade-in appraisals by undervaluing vehicles during initial negotiations, but inflating values on paperwork to make financing terms appear more favorable, deceiving customers about actual transaction costs while maximizing profit margins through complex financial manipulation according to automotive sales fraud investigation and trade-in valuation standards. The car dealership had been operating comprehensive appraisal fraud schemes where customers would receive low trade-in offers during negotiations while paperwork would show inflated trade values that would disguise actual vehicle pricing and financing costs despite sales agreements and appraisal procedures that should have provided honest vehicle valuation and transparent transaction pricing according to automotive sales standards and consumer protection requirements. The appraisal manipulation operation involved targeted valuation fraud and pricing deception while maintaining enough legitimate vehicle sales to avoid immediate detection by automotive oversight and sales monitoring that relied on honest trade-in assessment and transparent pricing practices for consumer protection and automotive sales integrity. The dealership had been particularly focused on manipulating trade values for expensive vehicles and complex financing arrangements while ensuring that appraisal fraud would be concealed through complex paperwork and manipulated financing calculations that would disguise actual transaction costs and profit margins according to sales fraud concealment and consumer deception techniques. The scheme extended to creating false appraisal documentation and pricing records while coordinating valuation manipulation with financing systems to maximize dealership profits, while concealing actual vehicle values and transaction costs that would affect consumer purchase decisions and financing obligations based on honest sales practices and accurate vehicle appraisal. The dealership had also been manipulating appraisal procedures and pricing disclosure processes to maintain valuation fraud while avoiding automotive oversight and sales monitoring that would reveal appraisal manipulation and pricing fraud that violated consumer protection and automotive sales integrity standards. The trade-in manipulation fraud was discovered when customers investigated actual vehicle values and discovered appraisal discrepancies, leading to evidence that revealed comprehensive automotive sales fraud and valuation manipulation that violated automotive sales regulations and consumer protection standards. As we conclude tonight's journey through these 35 automotive industry fraud stories, we're reminded that the car buying and maintenance experience, despite being essential to modern life, can sometimes harbor individuals who exploit trust and manipulate transactions. These tales from Reddit show us the importance of researching mechanics, reading all paperwork carefully, and seeking second opinions on major repairs. Whether you're purchasing your first vehicle, maintaining a family car, or dealing with insurance claims, these stories serve as valuable reminders about protecting yourself from predatory practices. Thank you for joining me tonight on Drowsy Tales Daily, and may these stories guide you into peaceful sleep with renewed awareness of automotive industry pitfalls. Sweet dreams, and I'll see you tomorrow night for another collection of fascinating Reddit stories designed to help you drift off to sleep. Until then, sleep well and dream of honest transactions and trustworthy mechanics.